All right. Hey, everyone. Mark here. Just give me a second while I adjust my microphone. All right. So welcome to another Greenbridge market analysis. I am not simulcasting today. I reached out to TradingView about this situation. They suggested I use some other kind of software. Complicated. So for now, I'm going to have to just stream on YouTube. And perhaps I'll alternate the days where one day I'll do just TradingView and another day just YouTube. I don't know. I'll figure that out. But for now, just on YouTube. So thank you for joining me. Second, a couple of things I want to talk about today. Specifically, we're going to do our analysis as usual. I'm going to answer your questions. And I want to address this fake news situation that we had earlier today. And I want to talk a little bit about Bitfinex. Okay, so let's get started. We have a lot to talk about. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. If you're new to my stream, please share your question or your symbol that you'd like me to analyze now. So when I get to that portion of the analysis, I can go over your market. Okay. So first thing is I want to just go over the economic calendar. You can use your own calendar for this or whatever. Real quick, I want to spend like a minute on it. Major events for this week. There really aren't any, okay? Just to read off a few. All right, so tomorrow we have for the pound, claimant count change. We have the ILO unemployment rate. These aren't really big market moving numbers. We also have for the US consumer price index. Now, something like that, because it's an inflationary number, could have somewhat of an effect on the market if there are any surprises, but that's not really a major news event. What I'm looking for on this economic calendar are anything related to the FOMC, anything like non-farm payrolls or Chairman Powell testimony. Those are the things I'm looking for, okay, because that can affect market behavior going into the report, and it can also stimulate a range expansion when the report comes out, and you don't want to be caught in something like that. That's the whole point, right? I'm not looking for trade opportunities on an economic calendar. So also on the 14th, we have China retail sales. On the 15th, for the pound, consumer price index. Again, no big deal here. On the 15th, Bank of Canada, consumer price index, all these inflationary numbers, okay. On the 15th for New Zealand, all right, that's probably going to come out sometime in the evening, US time. They have their GDP. Australia also has their employment change, unemployment rate. That can affect the Aussie if you're involved in that. And then on the 16th, which is Friday, we have US retail sales and the Michigan Consumer Sentiment Index. So that's usually early in the New York session, usually between like 8:30 and 9:30. You have to double check those timestamps because I don't have the timestamps on this report. Okay, but the point is, just be aware of some of these numbers. The big ones are Chairman, Powell testifying, FOMC meeting, rate announcement, or NFP, right? Those type of reports. There's nothing like that this week. So as far as economic news goes, there's really nothing major for the market to worry about or wait for, as we can see with some of these other reports, right? Like NFP. All right. So with that being said, let's get into, first, let's talk about Bitcoin, right? And by the way, if you could press the like button a few times, that might help my video a bit. If you like the video, I'm trying to work on my SEO skills and marketing skills a little bit here, and that's like one of them. So anyway, so let's talk about Bitcoin. Earlier today, I understand, because again, I don't pay any attention to this nonsense. I found this out in our chat room. There was some kind of news that Walmart was going to be accepting Litecoin or something. And if you look at Litecoin, it's like a vertical candle, right? It was a vertical candle. Now it's a gigantic pin bar. So yeah, let me just show you that real quick, right? I'm sure you've seen it. I'm sure you've all seen it. And it affected other coins as well. I mean, I looked at Litecoin earlier, and I thought this was a bad tick. I'm like, oh, that must be like a bad tick or something. No, that was this news, which turns out to be fake, right? Which goes to show you that reacting to information, like I keep telling everyone, reacting to information is a bad idea. It works randomly. And if you reacted to something like this, you are now caught. Okay, imagine the people that top ticked this thing. All right, I had a guy in here about a week ago or whatever, or my previous stream, and he mentioned that he had top ticked IDEX, okay, and he was looking at, you know, a $20,000 loss at the time when he was texting us in here, and I was like, man, you know, that's the result of chasing, right, or reacting to these things. Anyway, so let's get back into this Bitcoin situation and the Bitcoin levels, because in these situations, again, what you need to focus on are the levels and the structure, nothing else. You don't need to know the news. Okay, I know that sounds counterintuitive and it's hard for a lot of people because we like to grasp things that give us a feeling of wholeness or certainty and hope, right? And that's what news does, right? That's the role that news can play, and it's bad because hope is not a strategy. And news is worthless because by the time you get that news, the players that matter, right, the larger participants, they've most likely got it way before you, and they've acted on it way before you. So by the time you act on it, you're just basically taking it off their hands. So you don't need news, all right? It means nothing, especially on the smaller time frames. So this Bitcoin situation, my point with that is focus on levels, focus on structure. The structure here, let's talk about the structure for a moment, and let me get my little square tool. So the structure in this situation, is conflicted because we have this bearish pin bar range. If you notice, we are still inside the pin bar range, right? We're still inside this range, and we keep developing these 2 candle inside bars, right? And then they keep breaking. So there was a conflict yesterday. I wrote about it in my TradingView article. There was a potential buy signal here, okay? Because it took out the previous inside bar. It took out this little green candle right here, and that was a buy signal. But what I wrote about was it's conflicted because the momentum hasn't changed yet. We need to take out 47K, which it tried to do, but now we have a bearish outside bar, which maybe that's, you know, a result of that news or whatever. And now that just means more people are caught. So I see a question in here. Someone asked real quick, Alex, do you think that the current trend is still intact? If so, what needs to happen? Right, well, so as far as the current trend goes, if you're talking about the big picture, right, if you're talking about like, here, let's zoom out here a bit. You're talking about like the big picture on Bitcoin. Well, yeah, the broader bullish trend is still intact, but the short-term structure is conflicted. This is typical of a wave 4 consolidation. I've been talking about that forever. I haven't mentioned it in a while, but in wave 4s, the market doesn't continue the broader trend. In wave 4s, it goes to a point, sucks everyone in, and then just starts doing erratic stuff like this, right? Like that kind of stuff. And you can blame it on the news, and you can blame it on this and that. But the thing is, this is what a wave 4 is like. We saw this with gold for over a year. Gold was in a wave 4 consolidation. It's still in a wave 4 consolidation. So, and I tell people, in order to navigate this type of environment, you have to adjust your expectations. And you can do that with support and resistance levels and your recent structure. So as far as bigger picture trend, nothing has really changed. And we're basically in the middle of this range, right? Between 64K and 30K. We're basically fooling around in the middle of that, right? Basically. So this midpoint area is a tough spot, but it doesn't mean we will not get a new buying opportunity. My point with my article was I want to wait, right? That's what I said. I don't want to take the aggressive trade. I mentioned the possibility of the aggressive trade and where to put the stop, which would have been stopped out by now, right? Because the stop was basically somewhere below 44K. It went somewhere below 44K. But the point is this, I want to see a better structure, right? Basically the 43K area is basically holding, right? It hasn't broken yet. I don't like the outside candle, so I'm not going to touch that. I have no interest in taking any swing trades with a structure that looks like this. I like the level, so what I would like to see is an inside bar, or another green inside bar develop, or a bullish pin bar develop somewhere around here. I will consider that if I can get a decent price. If I get some stupid bar, okay, and a stupid bar because, you know, everyone piles in, and I see something like this, I'm not touching that, okay? So I want to see something small and something that I could measure my risk off of, right? Something like that, something small, maybe a pin bar that looks like that or whatever. And if I could measure my risk off of 42K or something, and I'm looking at maybe 3,000 or 4,000 points of risk, then, you know, we may have a possible swing trade off of a support. Okay, so that's one potential scenario for the week ahead. Now, with this current candle looking like this, momentum is still bearish, and that's what this candle is telling us. So if 44 is cleared, which it's not cleared yet, right? We keep testing it and we keep holding it. Okay, fine. But if we clear it, we're looking at 41K. All right, 41K, 40K, 39K. That's where momentum is pointing right now. So again, keep in mind that the whole point of this stream is to get a sense of what the structure is telling us and get a sense of what's reasonable to expect over the next few days. There are no predictions here, right? You always get these guys with predictions, but either they're fooling themselves or they're fooling everyone else, because no one knows where these things are going. All right, I mean, where were all these clowns when this thing was up here? Why wasn't anyone calling for a pullback to 44K? Why? Because they're all too busy projecting this thing. Oh, going to 60K. Oh, going to 100K by tomorrow. Blah, 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 blah. Right? That's what they're all doing there, right? But no one sees this coming, and then out of nowhere, it comes. So all we can do for these situations is prepare for the risk, right? That's what I was talking about the whole time. Prepare for the risk, which is a point that I want to touch on here in a moment. But let me go over the other markets here. So we had that news earlier, you know, with that nonsense, and that was my point about reacting to stuff. Do not react. You have to wait for levels. You have to wait for confirmation. That's what allows you to control your risk more effectively. And that's the whole point of this game. This is a mind game. We have very little control, right? The only control we have is over our risk, nothing else. Markets are random. You have to embrace that and accept that. There's no way to know where the market will be tomorrow or the next day or the next day. There are probabilities, okay? And the only thing we can control in those situations is how much we're willing to risk. Most people have no sense of risk management or don't bother with risk management. I was watching a video actually with a guy that, you know, I thought was pretty decent. I mean, if he was a fake, man, he's really good because he was fooling me. And he was talking about the mind game and risk management. The video had a very low amount of views, okay, compared to these morons that I watch who have 150,000 views, and they're talking about hope, okay? Hope is not a strategy. So let's talk about the stock market real quick. Thank you for sharing all these questions. I'm going to get to them. All right. So here's the stock market. Now, the stock market has been pulling back. And, you know, you're going to have all the buy the pullback people keep saying buy the pullback. I've been cautious on this thing for weeks, practically the whole summer. I was not interested at all. Now, I want to point something out here, an interesting little exercise, maybe you could call it. Back here when the market looked like this, okay? What were you thinking back then? Do you remember? I mean, do you remember what kind of information you were consuming? I mean, the market looked like it was going to go higher forever, right? Just day after day, relentless, bullish, 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 shrugging off any kind of negative news, blah, blah, blah. What do you remember thinking on this day? Because this is what was ahead of you, okay? And no one sees that coming. If the mainstream news and all these experts and all these other people, they're so knowledgeable, Wall Street knowledge, and oh, fundamentals this, and oh, sector rotation that, and all this other nonsense that they're using to capture your attention, why doesn't anyone call that? Okay? So it's because there's no incentive to call that. They're not looking out for your best interest. They're just looking to generate, you know, income through affiliate links, advertising, you know, all that stuff. So you cannot take any of that stuff seriously. But the problem with watching it is it can give you a bias, right? So how many people are caught from up here? Anyway, my point is this. The market's now pulling back. Okay. So we're going to get questions. I've seen some questions. Is now a time to short? Not yet. This is tough. So let's look at the support and resistance levels. This trend, as you can see on this chart, is still strong. higher lows and higher highs all over the place, right? And now we're just pulling back a bit. Okay, this thing's off, what, 400 points off of its high? That's really nothing for the NASDAQ. That's nothing. So the first support on this thing is around 15,183. We are now at what, 15,396, 15,4? I mean, so it was fooling around in the lower 15,3s, which is some progress on the bear side. We haven't seen that in forever, right? Because these markets never pull back. And now here we are with this little bearish configuration. So what you're going to have here likely over the next few days is you're going to have all the buy the pullback people start opening their big mouths, blah, 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 because we're near a support, right? So it would make sense for buying to at least try. So what will that look like? Well, you know, you can get, like on Bitcoin, you can get a bullish pin bar, you know, right here. Or you can get some kind of maybe an inside bar over the next few days. That will turn into a potential buy signal for another long. Now, will the NASDAQ make a higher high? There's no way to know. So how is this information helpful? If you're looking for stocks, this is what you want to see. First of all, is a pullback. That's the first thing you want to see, okay? Some kind of pullback. Second thing you want to see is something near a support. Okay, we're kind of near. Still have a couple of 100 points. It can get there overnight, right? You never know with these things. But you want to see a slightly more attractive level. But if it finds support sooner, okay, fine. The point is you're buying a market pullback, right? As opposed to buying at the highs, which a lot of stocks were giving buy signals up in here. All right, and I was warning, I have no interest in buying stocks when the market's on all-time highs, because this is what's next. All right, and over time, this will catch you. Over time, you may get away with it here and there, but I'm more interested in higher probability, not gambling and not, you know, chasing profits, because I know that chasing profits, even if you get some, are temporary. You're going to give it back because there's so much working against us in this game. All right, so that's the NASDAQ. Pull back. There's no buy signal yet, but it's an area of interest for stocks. Let's take a look at the S&P 500 real quick. S&P 500, right, same deal. They should be the same because they're very close to each other, right? They usually follow each other. We have an outside candle there. That's a bearish pin bar, but because of its location, that's not exactly a bearish situation. So it's at a support, right? This old resistance area here, this whole area is a support now. So what is that? 4430 area, 4440, 4450. So for the S&P, again, this means stocks that are more market correlated, this would be a spot to consider for longs if you're going to take a long. Now the thing is, if you go long, right, you find a stock, it gives you a confirmation, it gives you a buy signal, the S&P turns green, the S&P goes higher, right, over the next week or two or whatever. If that's the case, the question is, does it make a higher high or does it not? If it can't make a higher high, then we're looking at a consolidation most likely, okay? Not a bear market. There's nothing bearish about this market. All we're looking at here is a pullback. And as we know, in this highly stimulated market, the market loves to find new buying and loves to make new highs. So it could have one more try in it. Does it make a double top? Does it give us a lower high? If it can produce one of those configurations, a double top or a lower high, that would be an aggressive short. That would be the time to, if you're going to short it, that would be the time to give it a try. Because now you're not looking at a higher high. Most people try to short, they try to time these highs. They're very hard because it's very easy to get caught and you see, you know, how high this thing went, right? So that's the situation there. Don't react to where it is now. You have to anticipate what's likely to happen next. So the thing to think about is waiting for the buy signal. If you have your stocks on your radar, maybe some people have some stocks for me to take a look at, you know, we can now use this as a gauge to help us with our timing, right? That's relative strength or weakness to the broader market. It's a very important gauge. All right, so that's the S&P. Let's take a look at gold real quick, right? Because a lot of opinions in gold. Look, gold is stuck. Gold is stuck at this support. It's interesting because you have this resistance up here, which is still in play, and it's like it doesn't know what to do here. Okay, it's stuck. All right, fine, no problem. Is that a place to take risk? Possibly. All right, because I could measure my risk here. It's possibly a high or low. 1782 is the low. If we take out the current candle high, which was at 1798, so basically 18 even, right? You're looking at basically 20 points, maybe 30 points of risk, which is about standard. It's about average on gold, right? You shouldn't really be risking more than 30 points on something like this. And, you know, maybe it goes for the high again. If it can reach out for that high, what are you looking at? You know, 1834. So you're risking about 20 to 30 points, hopefully to make at least 30 points, right? That's 1 to 1, and it needs to test this high in order for you to achieve that. So it's not the best situation, but it's acceptable if you have that in your risk tolerance. Oh, I just got some coins from Uruguay. Hey, Barte, thanks. Okay, take a look at least one. Really appreciate it. Okay, 5 stocks. Okay, I'm going to leave that message there. Thanks for sharing that. I'm not even on TradingView, and the guy sent me 100 coins. Thank you very much. I really appreciate that. Oh, by the way, and people, if you want to share, I forgot to say this before. I was going to mention it and forgot it. You want to share what city or what country you're from? It's always nice to hear. I think it's a fun thing, and it always amazes me. Okay, so anyway, so that's the gold situation. It could turn into an aggressive long because you have this potential higher low, and you have this bullish structure before you. Now, keep in mind, right, that's just the technical point of view. Let's take a look at the dollar real quick, right, because we cannot lose sight of the dollar. This dollar can be tricky. Right, so this is the dollar index, and the dollar index established a higher low over here, which is a bullish sign. This structure going back a few months is still generally bullish, right? Higher lows, higher highs. Now, currently, it's fooling around. It's kind of stuck, and we have a bearish pin bar today. Look at that bearish pin bar. Does that mean the dollar is going to establish a lower high and break the support? No, it could just be consolidating. So you can't put a lot of weight into that. Right? I'm focused more on the higher low, especially when you take a look at something like this. And I bring this up all the time, the bond market, right? The bond market is really what controls a lot of things. A lot of people don't pay attention to the bond market because it's boring. I understand. I mean, the only exciting thing about the bond market is James Bond. I'm just kidding. That's a bad joke. All right, so this is the 10-year note. And you have to keep an eye on this because the trend on this thing is a reflection of interest rates. So we look at the weekly chart. Okay, the weekly chart, and it's a tough spot. It's indecisive. We have a lower high over here. After this higher high, we have a lower high. Bond prices go lower, yields go higher, right? We had this bearish action over the previous few weeks. I mean, it's just the start of the week here, so don't know how this candle's going to close. If this candle establishes a higher low and bond prices go higher, that means rates are going lower. That's good for gold. Okay, that's good for the stock market, bad for everything else, right? We're looking at inflation, but it's good for anti-inflationary instruments. If this thing closes weak, again, we can't make any judgments off this yet. It's only, it's the beginning of the week. Then we may see the anti-inflationary stuff or rising rate environment. Again, I've been talking about that all summer, and the market is still indecisive about that. At some point, the market's going to have to decide. And when it makes that choice, then we will probably see a more decisive move across the board, meaning if the stock market is going to break, we're going to see it, okay? And then that would be the time to really get out of things and, whatever, that kind of thing. All right, so those are the things I wanted to cover. Let me just see how I'm doing with time. Okay, oh, man, I always think I'm like ahead, and I look at that, I'm like, oh, I'm not ahead. All right, let's go back to Bitcoin because I want to start answering your questions. Also, real quick, I just want to say something here, and I'm going to start answering your questions here in a moment. But I mentioned before at the beginning of the stream that I wanted to just comment a little bit on Bitfinex. Someone in here about a week ago had asked me what I thought about the Bitfinex tether situation. And, I haven't really paid much attention to that in a long time because it just, hasn't been a thing that I've been hearing much about. So I looked into it a little further, okay? I didn't do any major research, but I watched some videos, basically. And, a lot of this stuff is opinion, but some of the stuff that they were presenting as factual information, if it's true, then this can be a problem, okay? The Bitfinex tether situation, for those that don't know what that is, I mean, you can Google it. There's plenty of information. There's no secrets about it. Years back, 2017, 2018, there was some problems with, is the tether really backed by dollars or not? Okay, and they were saying that it was. There was an investigation recently at the Attorney General's office in New York. They said that they lied, but you can't get the information. It's not, they won't share the information, right? You can't see Bitfinex's actual you know, are those tethers backed, what they're backed by? You can't see any of that stuff, right? It's all very hidden. So the reason why this is important is, I don't want to instill fear in people, but the reason why this is important is because if something like that gets out of control, then it can hurt the confidence of the entire space. Remember, markets are irrational. So while the entire market may be able to absorb that adjustment, right, which is like somewhere like $60 billion of fake tether or something like that, the market can absorb that logically, but it may hurt the confidence, right, and the perception of the future. So what I'm saying is, if something like that gets out of hand and everyone focuses on it, you can see Bitcoin get cut from, you know, 45K to 20K in a matter of hours. I mean, that's the kind of action you can see. So it's important to, my point is this: when it comes to risk and investing in these things, that's another risk. It's another vulnerability that you must keep in mind, okay? So don't go into these things assuming that there's any type of safety. Anything that has to do with Bitfinex, like their coin or not, I would not touch any of that stuff, because you're just asking for trouble. Here's why I say that. Because again, some of this stuff, you know, it's opinion, but they were looking up some of the people that run these companies, and there were quite a few of them with criminal records, right? And they were able to show their criminal record and blah, 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 blah. And if that's the case, you have people with criminal records running these companies and moving money around and printing fake money and all that kind of stuff with no oversight. That means they have no ethics or morals. They're just going to abuse whatever they can. So that alone, that character alone, that's something you have to consider. Okay, so it doesn't mean sell everything you got and stay away from this market. There's still going to be plenty of opportunities, as long as no one, you know, as long as people keep the party going, right? Because this has been going on for years. This is not a new thing. But one point that I just want to make before I move on to the next thing here, one point that I want to make is, back in 2008, during the housing situation, okay, many of you may not have been active at that time, but the bad loans, right, that were behind all that situation with the bad loans was known for years before it came to a point where the market realized how bad it was. Okay, for 2 years, I remember there was a blog I used to read, right? There was this professor from NYU, and he used to share this blog and explain, you know, all this bad loan stuff. And people used to abuse him. People used to, you know, insult him and call him all kinds of names and blah, 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 because no one wanted that party to stop. The market was making new high after new high after new high. Well, the guy was right, okay? And we all know after the fact, you know, where the market went. But my point is, that nonsense went on for 2 years in the face of this known problem. It wasn't a secret. So this Bitfinex situation reminds me of the same thing, right? All this crazy stuff going on and no one's noticing it, or no one cares, because everyone's making money. So when the herd mentality is that focused on the money, they don't want to hear anything negative. They're going to shrug it off until something smacks them in the face, like, you know, oh, Bitfinex went out of business today, that kind of thing, right? Well, because of the fake tether, whatever, right? Something like that can happen overnight while you're sleeping. So, you know, just keep that on the forefront of your mind when it comes to overall risk. A chart is not going to help you see that coming. So that's all I want to say about that, okay? Because again, we could sit here and I'm sure you could find some good news about that stuff and blah, 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 and opinions, but some of this stuff was really out of control. And you know, whenever you're doing something like that, printing fake money, and you're inflating the entire market with it, at some point it's likely to come out. Right? So just be prepared. Don't have all of your money in this space. If you have a portfolio of $100,000, don't have all $100,000, you know, invested in Bitcoin, Litecoin, and some other garbage coins, because it's the entire space. You're 100% exposed. You know, you should have something more like 10%. You know, if you want to be aggressive, 15% of your total portfolio. These are not high quality investment grade assets. Most of them are not. So don't buy into that hope of the future nonsense. That's all I'm saying. Use, you know, be cautious and be prepared for a situation like that, because it can come out of nowhere. All right, that's all I'm going to say about that. So let me get to your questions now. So Jesse, hey Jesse, good to see you, from Poughkeepsie, right? He's asking about oats, ZOZ. Let's take a look. ZOZ 2021 oat futures. Let's see what's going on there. Now keep in mind the oat futures situation is going to be, you know, a function of the dollar. Well, so your question is there a buy signal, right? Well, you missed it. The buy signal was the inside bar. This was the buy signal. The buy signal is in play now. Nice high or low. I mean, you know, again, that's a function of the dollar pulling back slightly today. So if you're playing something like this, that would be a great long if you were long at this high, which is, what is this high over here? 51, no, I'm sorry. This is 49.82, 498.2, right? If you were long from that, but if you're not, then you know you're chasing it now, right? So I wouldn't go long now. You have to wait for something similar, maybe another retest of that level. It's tested that level, you know, previously back here. Maybe it tests it again. Maybe it gives you a higher low. But I wouldn't chase this. The reason is the risk is very high. You know, if you buy this now, your stop will have to go below, at least at minimum, below the current candle, which was what, 488.4, and that can easily get tapped out, right? It's just the bottom of this single candle. The stop really should go below the swing low, which is greater risk. And how much potential do you have for this thing to make a new high? You can hope that it makes that new high and keeps going, but like I said before, hope is usually not a good strategy. And that dollar can turn on you, right? The dollar can get back in your face because the dollar isn't exactly in a bearish trend. So this can fake out, right? So to answer your question, is it a buy signal? You missed it. So thanks for asking. Hey, Elizabeth, good to see you. ETH, right? So let's take a look. Hold on, I think I have it over here better because I have notations on this chart. Where is it? Where's my ETH chart? Here's one. Is that the one? Yeah, I think that's the one right there. Or is it this one? No, it's this one. Right, okay. So Ethereum, and her question is, can you go over Ethereum and do you suggest scaling in and out of swings? All right. As far as, let me answer that first. As far as scaling in and out of a swing, if you mean like swing trade, I think it's a bad idea. It's very hard to do because when you're scaling, if you're going to do something like that, then you need to start out initially with a smaller position, right? The whole idea behind a swing trade is it allows you to take a slightly larger position because you have a specific stop in place and you're basically, you know, looking to scale out of it, right? Rather than scaling in, you're looking to scale out, meaning, you know, it goes to your target one, you get out a part of it, it goes to target two, you get out another part, and then you try to let the third one ride a bit, right? So you're scaling out and then you're getting a higher average profit rather than trying to get an average cost. So the average cost is better for inventory, right? And I talk about inventory all the time. That's more like investing. And we do that. We've done that with Bitcoin. If you're going to do that with Ethereum, that's okay too. Ethereum is a leader, right? But the thing is, if you're going to average or scale in on something like this, for one, price is not going to be as important. You want to really pay more attention to your size and how much money you're going to put to work. I would not suggest using any leverage for scaling because if this thing really makes a dramatic move, you're going to get margined out. You're going to get banged out of your position whether you like it or not because you're not going to be able to meet the margin requirements and you're going to take a loss at the worst time. That's usually what happens when you get margined out. So to answer your question about, you know, scaling swings, no, it's you want to scale out rather than scale in, okay? So thanks for asking. Now, as far as Ethereum goes, it's the same situation as Bitcoin, right? It got out of hand over here. these things tend to get out of hand. Someone mentioned in our chat room earlier some of these other coins like Luna, and there were a couple other ones that were doing their own thing there for a bit, right? Making new highs as a result of, I think, a reaction to that news we were talking about earlier. And yeah, you're going to have those where you get some of these coins that start to do their own thing because they're probably being hyped somewhere. So, you know, when these things go vertical like that, that's why I tell people, if you want to take those, because look, when it looks like this, right, or it looks like this, yeah, this thing's going to go higher forever. This thing's, and then you watch some video, or you don't even have to watch the video. On YouTube, you see a title of a video, Ethereum to 5,000 by next week. That title just put a seed in your head, right? It put an idea, oh, 5,000. You can think, yeah, 5,000, yeah. Subconsciously, you're going to be thinking it, right? And then this is what you're facing. You don't realize it. So, to answer your question about Ethereum, same situation. You have an old support here, which it's fooling around. What is that? 33.78? You can round that to about 33.50, and it's fooling around there. What's the price right now? 32.40, right, is the price right now. So in that range, but I guess between 33.50 and 32.50, that area, you have support. And we can see the price action is showing there is some support. Price is holding there. But this current candle is definitely not a good candle for longs. Plus it's established a lower high. So I would be anticipating bearish momentum over the next few days until it can prove otherwise. So you have a point of reference, right? This area. So, you know, you can go as low as what? 3,000, right? This is 3,100 around there. That's around 31. So give it a range between like 3,000 and basically 33.50, something like that. You know, you're in a supportive area. What you need is price action confirmation and structure. There's no structure yet, right? Structure would be like a clear double bottom. You know, there's sort of a double bottom kind of thing here, but when it's unclear like this, and on top of that, you have this right behind you, then I really have no interest until there's a clear structure. Right? And that's just not there yet, especially with this candle in our face right now. Also, again, Bitcoin is going to have to be at least doing something similar. Sometimes Ethereum will get ahead of Bitcoin, right? But I would rather see Bitcoin showing some type of confirmation also, because I have very little faith in these things really going on their own. Now, when something does go on its own, let me pull up Luna for a second, right? Because you get these things, right? Luna... Hold on, let me put Luna USD. I can't spell today because today is Monday. Luna USD, right? So when you have a situation like this, where it was doing its own thing, right? It was doing that. See that a few days back, and now, actually a couple of weeks ago, it was doing its own thing. Now it's just kind of turning into garbage. Maybe it was Luna. Hold on, I think I meant Luna. You know, they all sound the same to me. Yeah, that's the one I was looking for. Luna. Anyway. So when you have these situations on your hands, right, let's just talk about what this looked like at the time. Like something like this, for example. That looks like a breakout, right? Also, over here, this looks like a breakout. What do I tell everyone during those situations? Watch out for the fake out, right? That's a fake out candle because it turns red right away. And then it fakes out, right? Gives you some more buy signals. So you try again, fakes out again. Now, what people tend to do in these situations is, because this is very noisy and very complicated, and it's just like stop and go, and very frustrating, they just go for hope mode, because hope is pain avoidance, and it's just easier, right? And the market always comes back anyway, right? So, you know, you take some pain, and oh yeah, it came back. Look at that. I'm making money now. How nice. My point is this. In these situations, right, if you're going to go for these that trade on their own, like a Luna, and you go for these breakouts, the breakout is a valid strategy. But if you get the fake out candle right away, you cannot go into hope mode, which means you're going to take small losses, and you're going to take a series of them, and it's going to be frustrating, right? Now, when you get something like this, once you get this candle right here, that's when you need to start making adjustments, right? So let's just hypothetically, if you bought this breakout here, what is this high over here? 35.36. So let's say you bought 35.50 and it happens to work this time. and the price goes to 44, right? That's 9 points, and you have a nice little trade going. Hopefully you lock something in when it's vertical, because you should do that, especially if it's at 1-to-1 reward risk, right? If you took this trade, I'm just as a hypothetical example, if you bought it at 36 at the time, right? Actually, that would have to have been taken when it broke it here, okay? Not here, here. So what would be your risk at that time? Well, at least the bottom of this candle, at least, which is what, $30? So you're looking at what, 30, what was this high over here? 35, 36. So risking $6 as soon as you're up $6, right? You're taking something off the table. At least you should. And then you have to make adjustments when this thing turns red. My point is, when you play this breakout game, all these losses that you take here, most of the time, you do not make it back when it goes and does something like this. You do not make it all back. You make part of it back. And if you keep playing the game, and now you have to get out of more of it here and possibly holding on to some, it may turn into a loss again. You don't get anywhere, right? That's why go through all that energy and all that effort when all you have to do is wait for a support level, okay, which takes time, but waiting doesn't cost anything. You wait for a support level, and you wait till probabilities are more in line, right? So you have a support level here where it's fooling around, an old resistance, okay? But you don't step in front of this. You wait for confirmation. At least in that situation, you're not getting constantly churned and not getting anywhere with that. That's the point of the breakout thing. Now, on occasion, you can get a breakout that really runs in some of these things, but you need to understand what you're dealing with, okay? And you need to take whatever you risk, you need to start taking it off the table. Otherwise, everything that I just said. Okay, anyway, man, so that was Ethereum, and it led me into here Luna. All right, so thanks for asking. Hey, Alex, okay, so I answered that question, right? Anthony, SQQQ. So the SQQQ is the short, the pro shares ultra short. This thing is a real pain, right? Talked about this months and months ago, and now it's starting to perk up because the Nasdaq's getting weak. Don't get caught up in this, and here's why. Don't use this as your chart, first of all. It's a derivative of a derivative. So you have to look at the Nasdaq, okay? And like I was saying before with the Nasdaq, the Nasdaq is pulling back into a, excuse me, potential support area. So you don't want to be taking an ultra short position into a low, into a potential higher low. If you're going to go with the SQQQ, you should do it. If you're going to buy the shares outright, you should do it at the lower high, if it can produce a lower high or a double top. That would probably be the best time to do it if you're going to take such a counter trend trade. Because right now, you're taking a counter trend trade, bearish into a bullish market at a low, which favors longs, okay? Another thing you may consider with the SQQQ are options, but the problem with the options is the theta decay. And you need to really buy a lot of time. All right, so like a year. You could, like DJ put the premium the other day in my stream, I think for a year out, $15 strike price on these things, you can get them for like 50 cents or something. They're going to be a little higher now probably. But for over a year's worth of time value, 50 cents is a pretty good price. Of course, it's halfway out of the money, right? The market really needs to pull back significantly for you to make any money on that, because of the time decay is so high in these out of the money options. It's just a really bad idea generally, okay? So very, very aggressive and speculative. So thanks for asking about that, but I would wait, until you get the formation. Hey Kim, SQQ to the moon. Yeah, no, I wouldn't say that now. Isaac, WLUN. Okay, here's what I'm going to do. Before I get into that, let me just, since this Barte guy gave me 100 coins, let me at least run through one of his stocks. Okay, at least one, and then what I'll do is I'll try to go through them. He's got a few here. He's got BYND, Genus, and MSTR. Okay, so I'll do one, and then I'll come back to it. So Beyond Meat. All right, now, like I said before, the stock market is pulling back. A lot of these stocks have been in pullback mode way before the stock market even started. That's why I suspected the stock market was trouble to begin with, right? All throughout August. Now, as far as Beyond Meat goes, this thing's a mover when it moves. You have a potential higher low area. I like that. You have a double bottom situation developing. I like that too. Okay. And let's see what the price action looks like. So the price action isn't exactly with you yet, but if you get a break of this high, which is what, 116.25 basically, you have yourself a buy signal, and your risk can be defined at basically, you should round that to 110. So you're looking at about 6 or 7 points of risk. If this thing starts to run somewhere, I mean, your first area would be around 120, right? 120 area. So you need to make more than that. If you're buying this thing at 116, right, at 120 you're only up 4 points, but you're risking 6 or more. So this is actually, this doesn't make sense in terms of reward risk. And that's a structural area to be starting to take profit, right? Because you have a little resistance there. So if the reward risk doesn't really make sense in that regard, then usually the best thing to do is wait for the structure to change, which means you're gonna miss the first buy signal. Let everyone else figure it out, okay? Don't take the first buy signal because the reward risk doesn't make sense. Now, I could be wrong. Remember, markets are random, and that buy signal may do something stupid and go vertical, right? That's always possible. But based on the structure, I like to go by the structure that's there to be more within reason, right? Because we want to go by the proportions of market structure, and it's not very favorable. So, like I said, let the first move unfold. Let the first leg unfold. Then look for the pullback on that first leg. Okay, kind of like this situation here. Look, first leg went, it tried to give you the pullback, and then it broke, right? So this would have been stopped out. You want to see something like this develop again, something like this formation here, but without getting stopped out, all right? So that's what you should wait for, in my opinion, for something like this, especially in light of a stock market that may be weakening. Now, keep in mind, over the next few months, we have, holiday mode, right? Typical, the Santa rally kind of nonsense. And this market has been nonstop rally. So what? We're just going to have this little minor pullback and then rally into the holidays. Anything is possible. Just keep that in mind, that traditionally there's often strength around that time, which could be a pickup for these stocks. Okay? So something to keep in mind there. All right, so that's Beyond Meat. Now let me jump back into the chat, and then your next symbol is Gina. So I'll take a look at that in a moment. Let me see what other questions I have here. WLUN AUSD. All right, let's take a look. WLU, man, that's like I'm spelling the whole alphabet here. NAUSD. All right, what is this thing? Wluna. Okay, all right, so it looks similar to Luna, right? It looks similar, right? Same situation. So like I was pointing out, you are testing a previous resistance, right? New support. So the level is attractive, but there's no price action that's with you here. So stepping in front of this is a bad idea because there's nothing that says that this thing is going to hold and turn. Or I should say, it's a very risky thing to do, right? Stepping in front of that and then hoping for the best. Usually the more effective thing to do is to wait for some sort of confirmation. Wait for a green candle, an inside bar, a pin bar around this level, because the level is acceptable, and then you can measure your risk at that point and see if the thing makes a new high. You're going to need to make a new high, most likely, to justify that risk. And if it gives you a hard time between that point and the new high, you're going to have to be prepared to adjust. What I mean by a hard time is it does something like this over here, right? It tries to go, it gives you that temporary new high, it turns into a bearish pin bar. You don't want to see that, right? Look how this faked everyone out. Bearish pin bar. If I saw that bearish pin bar, if I saw this, I'd be like, ooh, you need to get out of that, right? And then it pulled back a bit. Oh, yeah, he was right. And then, oh, he was wrong, right? So those fake outs, that's part of the game. And that's why these things require so much attention and so much adjustment. And you have to be willing to take those small losses. And when they go your way, it's why it pays to lock in some profits greater than what you risk and then try to let some ride. It's the only way to make money in the long run with these things, okay? So thank you for asking about Wluna. All right, let's see what else we got here. The scammer. The scammer is back. Please don't scam me, the scammer. I know it's a bad joke. How many times do I have to say that? All right, the scammer. Let's see. Good to see you. EV1. Oh, hi, everyone. Okay, scammer talk there. All right, cool. Mr. Plow. Hey, good to see you. What do you think of XTZ? Greetings from Switzerland. Oh, welcome. All right. By the way, I'm broadcasting from the greater New York City area, northern New Jersey, and that's where my accent is from here. Okay, we talk like this. We put W's in the word talk. So XTZ on Coinbase. Well, talk about one that's doing its own thing. Right, I haven't heard from this one in a while. Wow, look at this. Interesting. All right. So first things first, doing its own thing, vertical. So right off the bat, if you're not in it, stay away from it, right? Because you're buying, look where you're buying. If you're buying into this now, or if you're interested in buying into this now, look where you're buying, into historical resistance, right? That area right there, it even goes this high, which is what? What is that? $8 around there. So very tough spot, vulnerable area. If you're long from a low price and the thing went vertical on you like this, hopefully you've locked something in, because these would be the prices to take something off the table. You know, 20 or 30% of your position, something like that. You want to unload onto the people that don't know any better, right? Because that's who would be buying up in here. People who don't know any better. People that are in a chat room consuming some nonsense hype that this thing is going to be at $20 by tomorrow. And occasionally these things run to something like that, but you get the idea, right? So as far as if you're not in it, what to do now? Well, wait for support. Your first support is right there, which is what? 569. So if this thing could get back into those mid fives, that would be the place to start, you know, to start looking for a reversal. You may get it slightly higher, maybe in the sixes somewhere, you know, somewhere like that. But you want to see the pullback, and you want to see some sort of candle that shows that the buying has started back in. Now, let me just show you something as an example here, because, you know, these things are not perfect. Back here, we could have made a very similar argument, right? I would have said, wait for the pullback. And it pulls back to like a supportive area. It gives you the buy signal and all that other stuff, right? And then it just doesn't work out. So that's why it's really important, if you're working on that swing trade time frame, you must use those stops, and you must respect them, and you must take that loss, because you see where this thing went. People that use margin, people that go into hope mode, they get exposed to this greater risk. They get margined out at the bottom, the worst possible prices, and eventually the thing goes back their way, and they look at it and be like, oh man, I can't believe I got margined out of this thing. That broker is evil. But it wasn't the broker's fault. You didn't use a stop, right? So that's why I have to emphasize that. So thanks for asking. And this is definitely a good one for the radar. But for the longest time, this was a follower. So I don't think it's going to become a leader now. It's probably hype. If this was a stock and there was some news on this stock and blah, 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 I'm okay, fine. I'd be more accepting of that. But it's an altcoin. And, you know, so most likely it's just hype, okay? So I hope that answers your question. Thank you for asking. Hey, Adrian, good to see you. Thela from Pakistan. Hey, Thela, thanks for joining. And ADA from XX. Let's take a look. Dan, right? ADA, let's take a look. Cardano. What's going on with Cardano? Well, so Cardano is just following along with the others, right? Nothing surprising here. You have a sell signal because you have this inside bar. See this inside bar right here from the previous day? Now the general structure here is bullish, right? Like Bitcoin, the recent structure is bullish, like Ethereum. So that's all in line. The inside bar, you have a sell signal. So there's nothing to do here. The best thing to do is wait for the supports, find a support. I wouldn't short this thing, right? So just because there's a sell signal doesn't mean you short it, because you're shorting something that has a strong structure at the moment. So you look at this support, this old resistance, new support, $2.25. And you want to see if this thing can give you a new buy signal somewhere in that area, right? Inside bar around here, pin bar. If you want to be more aggressive and you just want to try stepping into the support, you can try doing that, but it's not something I encourage, because this level can break like it's not even there if Bitcoin has a problem, right? If Bitcoin breaks its 44K, if it breaks that clearly, like you're seeing 42 or 41, if you see that, this thing's going to do the same thing, right? So that's why it's usually best to wait until you get a confirmation candle. You're not going to get the best price, but at least momentum is more likely shifting, going your way, and that's a much easier trade to hold on to because it's more likely to go your way, right? That's why we wait for confirmation and we give up the best possible price, because the best possible price can get better and better and better, and that's a very expensive way to try to get into these things, especially then you get frustrated, you say, I'm not going to use a stop, and you go into hope mode, and then this thing goes a lot further than you thought, right? Because there's no way to know. All right, so thanks for asking. Let me go back to Bart Guy here with Genus, G-N-U-S, all right, G-N-U-S. Let's take a look. Another stock, Genius Brands, and all right, so the first thing I see here is a elongated consolidation. That's not bad. I'm looking for levels next, right? You have a level right in this area where it is now. What's the support over here? $1.68. Okay, so you're in an attractive area. At least you're not at a range high. Now, what's the price action doing? Let's open that up a bit here. So you have, that's not a bullish inside bar, but it's trying to be one. All right, it's a potential high or low. This is such an inexpensive stock. Sometimes, you know, you can't really put a lot of weight in these candles when things are this inexpensive like that, because you're going to get a lot more noise, right? So in a situation like this, I would look for these highs to get taken out. $1.55, $1.60. You do something like that, then you have a high or low established at that point, and then you see if this thing can, you know, give you a little bit of a run. Your risk, of course, will have to be defined either by the current low, 145, this current candle low, or the structural, the range low, which is 142. It's not really a big difference. So you might as well put it at like $1.40 or maybe even $1.35, something like that, and then see if you can get at least 1-to-1 or greater at that point, and see if the structure improves. If the structure doesn't improve, then what you will see is a failure again at this little minor resistance. You'll see a failure there and start to pull back, right? And at that point, you're either making adjustments, you're getting out, or whatever, and you're waiting for another signal. Swing trades on these really inexpensive stocks are tough because of that noise. They can be very tough to sit through, and you know they can take a long time to really get anywhere. All right, so thank you for asking about Genius Brands. All right, let me see what else we got here. Alex, Romania. All right, hey, I got Schwartz here from Romania too. Okay, cool. Yes, the country that loves me the most, Romania. I have a lot of people that like me in Romania. Yeah, I don't know why, but Romania. Okay. So, Alex, what do you think about monthly ABC correction, C being creating a huge bull flag? Okay, let's take a look. So, you're talking about Elliott wave, okay, and you're talking about ABC, C being 19 to 22K. All right, let's look back here. Let's go to a weekly to kind of get some perspective. So you're saying ABC. So this recent move higher, I guess, would be the B wave, right? And this would be the current C, right? This would be the beginning of C. And C waves are usually 5-wave structures. And you're saying going to 22K, right? Which would be a lower low on this. Now look, so that's Elliott wave. And while that is possible, I mean, I can understand why you would come up with that wave count. I wouldn't put a lot of weight into that because there's too many things that change, right? Because that's too broad of a forecast. And the drawback to something like that is it can get you opinionated. You'd be like, oh yeah, we're in the C wave. So you're going to be shorting this thing and blah, blah, blah. And it may find support again at 30K and reverse in everyone's face again and blah, 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 right? So don't become opinionated that way. use Elliott wave more for like a roadmap type of situation. So again, you could be correct, and it would be within reason at this moment to expect some further bearish momentum, but I would not pinpoint 22K. All right, 30K, really 41K is the next support, and then you're looking at 35K, and then you're like you have 37K, and then there's like 30K. There's a lot of supports along the way here where this thing can reverse again. Remember, wave 4 is they're very erratic, so there's no, you can't really pinpoint. And then to assume that we're going to go to 100K after that is also something you cannot do, because again, you know, that's going to be dependent on catalysts and things that, you know, are just, there's no way to know. So you can't, if this thing happens to go to 22K, you can't be buying it thinking, okay, I got the bottom of wave C and now the next wave is going to be 100K. Like, while that's possible, you can't really think in absolutes. So it's better to let the structure prove something, and then, you know, once you get some proof, you can measure your risk depending on the time frame you're looking at and work from there. It keeps your mind open. And that's what you have to have a very open mind. You can't think in opinions, right? And that's one drawback with Elliott wave. And when I first started using it, it would always give me some kind of opinion. And I'm like, oh yeah, well the market's supposed to do this because, you know, there's this wave and there's that wave and it should do this. And the market's going to do whatever it wants to do anyway, whether it's in a wave count, whatever you think, blah, blah, blah. And that's okay if you just want to have an opinion. But if you're going to bet money on it, it can be very costly, right? Especially if you're wrong, because you're going to be like, oh no, I know I'm right. And I'm going to put more money into this, right? And it can be very, you know, expensive. All right, anyway. So I hope that answers your question. Let me see what else we got here. The scammer. What if today's Bitcoin candle closes green? All right, so we're on the Bitcoin chart. If today's candle closes green, which anything is possible, we still have a few hours, that would actually be a very bullish sign. If this thing can actually work its way all the way back up to the open here, which is what? What is the open? 46.039. So basically going back above 46 and then closing up there, you'll have a green candle. That will also be a bullish pin bar. So that would be an interesting turn of events, and that would call for most likely a short squeeze, right? Because that means there's too many people short and now they're about to get squeezed. And a break of the high of that candle would be a new long, especially from this area. So it would still be aggressive, because when things happen real quick like that, you know, you can't sit there and think that it's going to, you know, guarantee anything, but it would be definitely a bullish sign and a long signal. The only other problem with that too is the risk. The wideness of this candle is it's very wide. So the high of the candle is basically 47, and the low of the candle is basically what, 43.4. So what is that? 3.5, maybe 4,000 points. That's not too bad, but the stop would have to go slightly lower than that, right? So that's where your risk would be defined from in that type of scenario. So thanks, that's a good question, right? And you should be prepared for something like that, even though it doesn't look likely at this moment. Things can change in a few hours. It just comes out of nowhere, right? So thanks for asking. Shorts, what do you think? Will there be a big pump, or are we going? So this is far from a bear market. I wouldn't call this a bear market on Bitcoin. This is it's just a consolidation. That's all it is. And in these consolidations, I know people are asking, is this a change in trend, change in structure, blah, blah, blah. The recent structure, this is bearish, and it may take us to 41K, but that's not a bear market. Going to 37K is not a bear market. Going to 35K is not a bear market. Going back to 30K is not a bear market. It's just a consolidation, okay? Going to 20K and breaking it, that could be possibly a bearish environment, okay? Possibly. But it's really tough to call, a bear market. So I'm just looking at those support levels, and if any of those support levels hold and give us a clear long signal where I can define risk from, I'd be open to the idea. But look, I'm very selective. And I say that a lot of times. If I see this, I'll be open to the idea. But sometimes I see some things and I'm just not, there's some things I just don't like. And it's subjective, I know, and I understand. It's hard to work with stuff like that when you're new. But I'd rather, there's certain things that I really like to see. And if the market doesn't want to show them to me, then I don't have to play, right? So that's why I'm extremely selective, and it's frustrating for people. I understand, but I'd rather play that way than just keep playing and losing money and losing money and losing money, because I've done that, and it's just exhausting. All right. Anyway, so good question. So what else we got here? Just going through the chat here. Again, thanks for all these great questions. Man, I'm so slow. Look at all these questions. Okay, so that was Schwartz. All right, Savi, Litecoin, support and resistance, reward risk. All right, Savi, let's take a look. So Litecoin was the subject, I guess, of that Walmart news. And I mean, man. All right, so extreme bearish pin bar. This is bad because there are a lot of longs that are going to be caught in this, right? A lot of longs who react. So support and resistance. General trend is bullish, just like Bitcoin, right? So if Bitcoin can keep its act together, then even though we have this lousy bearish candle, it's not going to mean a whole lot if Bitcoin can keep things together. As far as support and resistance goes, you're looking at support right here, which is what? 162. Okay, it's touched that level quite a few times. You also have this level right here, which is a resistance, right, which it blew through and came right back into, which is what? 186. So you could probably round that a little higher, possibly around 200, or maybe in like the mid 190s. You can say your resistance is around there somewhere, right? Something like that. And as far as doing anything with Litecoin, I would leave it alone. This is definitely not a buy signal. You might want to wait for another inside bar nearer the support, nearer that 160 area. That would be ideal. Also, you'd like to see something similar from Bitcoin, because this thing is just a mini version of Bitcoin, in my opinion. And the chart, usually Litecoin follows pretty closely, right? Except when there's news like today, fake news. All right, so thank you for asking about Litecoin. So yeah, as far as reward risk, your reward risk would be better if you can get it around that 160 area, followed by a candle that's supportive. Like, let me just give you an example. So let's say you go back to the level and you get a candle that looks just like this, right? That's a bullish inside bar. The color of the candle doesn't matter as much usually if you're at a support level in a bullish trend. What matters really is it's an inside bar, and the high of the inside bar is taken out. In that situation, your risk is going to be defined by the low of the inside bar, or the nearer structural low, which is this one here, 165. It's close. So you could round that to maybe 160, and that's where your risk would be defined from. And your reward would begin around the resistance, right? The 180s, 190s, and you need to be better than 1-to-1. Otherwise, don't bother. But if you're buying it around 165 and you're risking, 10 points, 15 points, something on Litecoin, you're not going to risk more than 20 points. So let's say max risk 20 points, right? You buy it at 165, stop at 145. If you're getting 185, you're at 1-to-1 right there. It can touch 185 reasonably. That would be if you want to take something like that, at least you can justify your risk. All right, so thank you for asking. Adrian, we can hear you well today. Just loud and clear. Keep your mics. Oh, okay. Adrian, I really didn't do anything besides move my microphone. So sometimes I move this thing around. Maybe that's why the sound varies at other times. But thank you for mentioning. All right. Hey, I live in Zurich. Oh, okay. Bart. So Bart from Uruguay. Okay, Bart. So Bart, you remind me. Let me go over one more. Bart has MSTR. All right, let's take a look. Bart, and again, thank you for the 100 coins. MSTR. What do we have here? So Bart seems to understand our strategy, because every single one of these, I'm seeing the same thing, right? Double bottom, potential high or low situation, right? And he's looking for these buy signals. Okay, that's how we look for swing trades. So what do we think of this one here? Well, the general structure has been improving, right? Look at this range breakout right here. This is a great example. Let me just point this out before I talk about the price action. This is a great example. See, this range looks ugly, and then it breaks above the resistance of that range. That's a change in the structure. That took about, 10 days or something for all that to play out? That's how long you have to wait for these things at times. right? And then it breaks the structure, and instead of chasing it, you wait. Again, another 10 days is what that looks like. So now you're in a much better situation. What if you had bought this up here? Oh, I can't wait anymore. It's breaking out. It's going to go up forever. And you could have gotten a better price, right? That's why usually waiting is the better thing to do, no matter how good something looks. All right. Usually people think things look their best when they're at their highest, right? That's when things look their best. I mean, look at this. Wow, it looks amazing. Wow, this thing's going to go up forever. This thing's going up to whatever, 1,000. Okay, and it doesn't do that at all. Plenty of buying opportunities. All right, so let's talk about the current situation. So you have the double bottom off of an old resistance. It's now a new support area. Okay, today's candle is almost an outside bar. That's acceptable. That's a decent long signal. All right, so if you take out the high tomorrow, which is what, 642, 642 and a half, basically, that would be your long. Okay, a break above that. Now your stop is going to have to be below this low, which is 600. I mean, this is an expensive stock. You're looking at about 50 points of risk. Okay, so you're going to have to size appropriately. But the question is, where's your first target if this thing starts to go? That would be up here, and that's 699, around 700. So you're basically risking about 50 points with target one about 50 points, and it's within reason. So that's 1-to-1. So that's an acceptable swing trade. All right, the setup is there. The reward risk makes sense. You just the thing you need to make sure you do is keep your general risk like at 1 or 2%. So we just talked about 50 points, which means your size has to be so that if you lose 50 points, it's only 1 or 2% of your account, right? This is where people go wrong because they're like, oh, I got the buy signal, I got this, I got that. And then they put on a position that's too big. And if it goes to the stop, they lose 10% of their account or 20% of their account. You cannot lose that kind of percentage of your account, all right, and expect to play this game very long. So it needs to be 1%, 2%, 3%, depending on how aggressive you want to be. Something like that, all right? And then once it reaches target one, you want to see if you could let some ride. Let's just say, you bought 5 shares. Let's say you bought 15 shares, right? You sold 10 shares at the target one, and now you have 5 shares, you're going to let them ride, right? As an example for a smaller account. And you try to do something like that. Try to let 1/3 of your position ride and see how much more you could make on that if the market wants to pay you. All right, if the market turns before that, then you have the option to get out earlier. And you need to make those adjustments sometimes, right? But then when you're small enough, you don't care if it pulls back because you locked in a decent amount of profit. Even if it pulls back to break even, you don't care. And that's what allows you to really ride a big run. But keep in mind, again, so something like MicroStrategy, it's giving you the buy signal. I just talked about before with the S&P and NASDAQ. This is obviously going to be more sensitive to like the NASDAQ. And the NASDAQ is pulled back into a potential buy area. So if the NASDAQ buys, if they try to buy this thing over the next week or whatever, you have that behind you, which is good. So that's another argument in the favor of something like this. That's why you wait for these type of pullbacks when the market pulls back. That's why it's better to wait for the entire market to pull back. So great example. This would definitely be a swing trade idea. Okay, so thanks for asking about that, MSTR. Definitely have to keep an eye on that one, and see how that one turns out. So thanks for asking. Abraham, can you give us your input on eGold? Okay, eGold, EGLD, USDT. USDT. Just gave you a whole speech on that before. So, all right, vertical, right? Vertical with a bearish pin bar today. This is what you don't want to see when you buy, right? If you just bought this thing and you get the bearish pin bar, that's a fake out, right? If it takes out the low of that pin bar, it's probably going to pull back, right? So it's extremely risky to stay in something like this. This is turning into a sell signal. The signal is not there yet. It needs to take out the pin bar low. But the setup is there, right? So if you're in it, hopefully you've taken something off the table. If it gives you the sell signal, you should probably take more off the table. But that is a perfect example of what something should not do after you buy a breakout. Okay, anyway, as far as support and resistance goes, well, the general structure is bullish. So you're looking for supports, right? Your first support, we can argue, is around here. You have this high back here, so it's going to be like a range between like these areas. What are these prices? 189 and 197. So basically like 190 and 200. Those are going to be areas of interest. This thing is at 256 right now. All right, another area of interest or potential inflection point will be here. As you can see, it hesitated there about a week ago, right? See the little hesitation? That's not a coincidence. That's a reaction to this. So what is that, 245? So 250. All right, so basically 250, 200, and 190 are your levels. Wait for the pullback, see which one it can give you, and if it can reverse from there. But buying this thing now, you know what I said about that. So hopefully that makes sense. Thank you for asking about EGLD and Tether. So Gotham, greetings from the Bay Area. All right, have you? No, oh, so, okay. Yeah, no, so Gotham, Gotham, or however you pronounce that, there's a problem with the streaming. They changed something on their server, and my software is no longer compatible. So I can't stream on there. And I sent them a message about it, and they told me, well, you need to change your software. And it's not that simple for me. So it's either I stream straight from my browser, which I can do, but then it will conflict with this. So I'm thinking maybe I'll alternate, and I'll do one day over there and one day over here. That's what I'm thinking. I'll do something like that until I could figure out, you know, how to simulcast again. Because right now I can't simulcast because they changed something, and I can't stream on their server. So thanks for asking. Kim, can you look at AMD? Yes, AMD. All right, how am I doing with time here? Because my voice is running out. Let me see. Okay, a few more minutes. Where's Wedge? Is Wedge in here? You know, Wedge makes fun of me when I say that. Because I always say a few more minutes, and I say it like 10 times. All right, so AMD. So AMD is a perfect example of a market stock, right? Market stock meaning it's going to be highly correlated to something like the NASDAQ and the S&P. Look at today's pin bar. So Kim, this is a very nice example of a potential swing trade long. You have a nice, well, we know this thing's been bullish for a long time, right? Nothing new there. You know, actually, Bart guy, I'm gonna turn off this message here. I just wanted to have that as a reminder for those symbols. Thank you again for the coins. So AMD, we have the double bottom, okay, in place, followed by a bullish pin bar within a broader bullish structure, right? That fits all the rules. If this thing takes out this pin bar high tomorrow, 105, basically 105 and a quarter, then you have a buy signal. And this is a nice setup in light of where the NASDAQ and S&P have pulled back into. Now, so if you want to go long something like this, tomorrow upon that breakout, your risk is going to be defined at basically 101.98, so that's 102. You figure the stop would have to go around 101.50, maybe even 101, something like that, which is going to give you, what, maybe 4 points, perhaps something like 5 points of risk, which is not unreasonable for AMD. And you're going to need this thing to run up at least to here, right? You're looking at maybe 112 area, something like that. So risking 5 to hopefully make 6 or something. The reward risk is barely there, but it's there. Okay, it's not unacceptable. It's there. Or maybe it makes a run for the new high, which is less likely. But if it could do something like that, then yeah, you have a nice trade on your hands. The thing is, in a situation like this, right, the stock is showing what we want to see. But when you take a trade like that, if you take it, again, the trade, there's no signal active here. This is just a setup. You want to keep an eye on the NASDAQ. Because the NASDAQ, I mean, how did it close today? 15,449, right? You see that? So they bought it off the lows. So they're going, the buyers are going for it, right? So tomorrow I would anticipate, unless there's some negative catalyst overnight, right? Or maybe it tests the low again tomorrow, fakes everyone out or something. But when you see that, this thing should be green the next couple of days. And theoretically, it should make a new high. If it does not make a new high, things like AMD are going to get hammered. So you need to be prepared for that, right? So maybe you take AMD, it's a few points in your favor, and then a bearish pin bar develops on the NASDAQ, right? You don't want to see that if you're in AMD, right? If that makes sense. So thank you for asking. Schwartz, what do you think about Rune? Okay, let's take a look. RUN USD, is that the correct symbol? Let's see. Yeah, so this looks similar to the Bitcoin Ethereum situation. You're at a support, right? And many altcoins we looked at are in a similar situation. You're fooling around at supports. You have a bearish candle in development. It's not closed yet. Can't really argue that this, you have a long tail on it, but the open to the close is too wide, okay? So it's not really a good pin bar to work off of either. You're at a support. So what you want to see in this situation is the inside bar develop, right, over the next few days, inside bar or pin bar, bullish pin bar develop in this area, because you have the area. Of course, you're going to need Bitcoin to cooperate. So keep in mind, in all of these coins, they turned around this resistance area, most of them, right? They have this similar pattern. This is a double top. So you have that bearish structure in front of you, or I should say right behind you. And that can be a problem because the next leg higher, if the next leg up makes a lower high somewhere between this double top and, you know, whatever, like somewhere like that, that's a lower high, and that could mean things are turning the other way. It doesn't mean we're in a bearish trend, but it means that, you know, if it can't make that high, then you want to adjust your risk, wait for another test of that low, and make sure that that low holds. If the low breaks after a lower high, then you may see a more pronounced move lower, and I would expect that across the board. I'd expect that. That would mean Bitcoin is breaking 41K. That means Ethereum is breaking 3K. That's what that should mean, okay? So use Bitcoin as your guide for something like this. All right, so thank you for asking. All right, what else do I got here? So, man, I got a lot of questions today on YouTube. Usually I don't get as many. So that was Rune, all right? And let me see here. Okay, Adrian, okay. About Bitfinex coin. Oh, that was Adrian asking about, you asked about that question. Right, well, they have that Leo coin or whatever. Right, yeah, I'd stay away from, after all that stuff that I found out, I was like, oh man, you know, he's just asking for trouble, right? I mean, like I said, all right, I'm not going to go into that rant again. I'll talk about it for another 3 hours. All right, Savi. Oh, Savi's from Brooklyn. Hey, Brooklyn. Guys, do not forget, oh yeah, thanks, Savi. From Brooklyn. I almost have a Brooklyn accent, but it's not. All right, let me see. Mike, good info as always. It's a big risk to invest more than in H-bar. H-bar? I know I saw some hype videos about H-bar. Oh, yeah. Yeah. What's the story with that? Hype, and more hype. Vertical. So whenever you see something vertical, the first thought that should go through your mind is herd mentality, right? Don't think that this is good. This is bad. People, how can this be bad? It's vertical. It's bad because what's likely to happen next is vertical the other way, right? That's why probability is not in your favor here. That's why it's bad. You have to think like a contrarian, not grasp at what is obvious. So yeah, H-bar, risky, bad place to buy this thing. Is that a bearish pin bar? No, it's not a bearish pin bar yet because it's hard to see this candle, but the candle, it's got this entire range right here. Okay, it's like a doji type of candle, and even if that low of that candle breaks, you'll have a sell signal, and your first support on something like that would be around 28 cents. Yeah, stay away from these things when they look like that. Wait for that pullback at least. If you're going to play with it, wait for that pullback. It's the easier thing to do. Okay, so thank you for asking about that or mentioning it. Alex, okay, sell Eagle only after 360. Okay, all right, no problem. Hey, Travel, oh, thanks, no problem. No, again, like I said, with that whole Bitfinex thing, you should be aware, you should just keep that on the forefront of your mind as just another risk that can come out of nowhere, right? I don't want people to think, to get sucked into the hope and the hype. That's why I'm so unpopular. All right, people like to be lied to. All right, and that's very obvious just by looking at numbers from guys that actually are more realistic compared to guys who are not. When I look at these fake gurus and stuff like that, and people like to be lied to. You know why? It has to do with the pain avoidance, right? We like hope. Hope is a pain avoidance mechanism. Think about when you're in a position that's going against you. You don't have a stop. The loss is pretty big. You don't want to take the loss. It'd be very painful to take that loss. So what do? I hope it comes back. I hope it comes back. That's a lot less painful than taking the loss. Even though the loss is a lot more, it's making you uncomfortable, it's more uncomfortable to lock in the loss. That's what hope mode will do to you, okay? And most of these guys depend on hope mode to sell their products and services. And people, especially when people are caught in these things, you know, they're very emotional and they want to hear just good news. So these guys come out and they're going to give you good news, whether it's real or not, or effective or not, or what. It's just hype and hope. And this space is full of it. It's ridiculous. Anyway, all right. I'm not going to rant on that for 3 hours. You all heard that earlier about with Bitfinex. Okay, so what else do I got here? Okay, just going through the chat. Elijah's from Lithuania. Hey, good to see you again. INO. All right, write about it in the chat. Okay, INO. What's the story here? So INO is a pharma stock, right? These stocks, what we like about these is they tend to do their own thing, right? These do their own thing because they're driven on usually specific news, as opposed to something that's more correlated to the market, right? Like the S&P. So as far as right now, you have a support level. It's touched this level a number of times. What is this, $8? So it's at an attractive location. Also, it's a higher low. This entire area is a higher low relative to this low. So you have that going for you. Okay, I mean, look, this stock's been a mess. Look at this thing. It's all over the place, right? So you have the higher low. You're at a potential support level. So you have those things going for you. Current price action, though, is not favorable yet. So a couple of ways you can go about this. You can wait until the high of this candle is taken out at $8.05, something like that. You can wait for a bullish outside candle, a bullish pin bar to develop around this location. Your risk can be defined by the range low, which is going to be about 770. You can round that to about 750. Okay, and that means, so if you're buying this thing around $8.05, whatever, you're risking about 60 cents maybe more. You need to make that at least. Can this thing run 60 cents reasonably? Let's see. 864, barely, just barely. Okay, so that means you're going to need a more pronounced move to get somewhere with this, which it's possible that you get it, but the whole idea, the whole thing with the one-to-one reward risk is that's where you should start taking money off the table if it can get there, right? And this stock can get back to this area reasonably. But if it gets there and starts to give you a hard time because other people are going to be selling there too because they see the same information, then it may be hard to get out for one-to-one, right? So it's not exactly worthwhile. We like stocks with a lot of potential where it's at a great level, but the resistance is a lot higher. So if it runs, you know, making one-to-one at least is a lot easier, right? So I'm not saying this is a horrible idea, but like Mister, for example, was in a better situation. The reward risk was clearer. Not a whole lot clearer, but it was clearer. All right, so that's what I have to say about this one. Maybe you get a better price. Maybe this tests slightly lower and gives you a failed low and can help you justify that risk a little bit better. Also, it's possible that this thing spikes, right? It's possible and gives you a better reward risk, but you can't depend on that. You can't sit there and, oh yeah, I'm going to get that spike and I'm going to get out at the most extreme point. You can't depend on things like that. You need to think more in like what's more like average, right? What's more likely to happen on the average. All right, so thank you for asking about Eno. Travel. Luna means moon. Oh, okay. Luna means moon in Italian. You know, you would think I'd know a little more Italian, right? But I don't. Yeah, that's embarrassing. I know. But anyway, thank you for the language lesson. All right, let me see. Do more retests on a support or resistance demonstrate any weakness? Okay, that's an interesting question, Musa. Do more tests on a support or a resistance? Often, the more times it touches, I mean, there's both sides of the argument on that. But the way I see it is this. Let's use a resistance as an example, because we've seen this, and it's also going to, a function of this is going to be your broader trend. If you keep tapping a resistance on Bitcoin, for example, like with 50K, it was lingering there and lingering there and lingering there, and the broader structure was bullish. Eventually, that level gave way, and we saw 52K. Right? So to answer your question, the more touches, yes, I would agree, it gets the level gets weaker, and it's more likely to break. But a function of that, again, is going to be part of the broader trend. So if your broader trend is bearish, for example, right, and you keep touching supports and you keep touching supports, that support is likely to break, right, if it can't get its act together. All right, so good question. Very good question. All right, let me see what else we got here. Schenk from Turkey. This time from Istanbul, Turkey. I was there once. Interesting city. Yeah, I was there. I was there for a company Christmas party, believe it or not. Okay, long time ago. So yeah, interesting place. Eric, what do you think of long-term Bitcoin cycles? Is correlation to have? Eric, that's an interesting question. You know, there's the what was it, the stock to flow model, right? And the halvening or whatever, and because of that, because the mining reward becomes less, they mine less, so there's less supply, whatever. There's a whole rationale behind that. And for the long term, that may make some sense, but the thing is, you're drawing from logic, which, okay, since you're talking about the supply of coins and there's a limited supply, okay, that can make sense, but you have to be careful with logic, because all of that was still intact, right? And we watched Bitcoin go from 20K to 3K, which makes no sense, right? Like, no one saw that coming, 20K to 3K. And then we went from 3K right to 64K back to 30K. At 64K, no one expected 30K. So that's why I don't put much weight into those models, certainly not for short-term timing, okay? Irrational behavior and emotions drive price more than anything else in any market. It's the herd mentality on both sides, whether fearful, greed, whatever it is. That's really what drives the price and determines the value, especially on the short term, right? So that's why it's better to really stick to more sentiment-based type of information, okay? So at least for me. So thank you for mentioning that. Hey, Eric, from Wisconsin, cool. Yeah, you know, those Packers yesterday, I'm sorry. Anyway, I don't watch a whole lot of football, but I saw that one. Zelta from Riga, Latvia, welcome. Okay, and let's see, what do you think of might be too soon to learn anything? Oh, is that okay, I don't know what the symbol is for that. Maybe you could share the symbol. Let me just see what else I got here. I got to wrap this up here momentarily, so hold on, let me just check the time. Yeah, got a couple more minutes, okay, a couple more minutes. If I missed your question, I apologize. Alex, thanks for asking the ABC question. No, I won't short BTC. I keep an open mind. Okay, no problem. I will dollar cost average along the way. Okay, I was thinking above 100K on a very long term. Look, Alex, as far as Bitcoin going over 100K, anything is possible, right? So we do have to keep that open mind, and especially since Bitcoin is it's an inflationary hedge or anti-inflationary instrument. It has that potential, especially since there aren't many coins. It's a limited amount of coins and blah, 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 right? So if sentiment can get better and we don't have these Bitfinex problems that seem to be covered up and all this and all that, yeah, it's all possible. It's just, instead of focusing on that, like everyone wants to hear, oh yeah, we're going to 100K, so I have nothing to worry about. No, you really need to focus on the risk. You know, what if it goes to 20K? Can you handle that type of pullback? You know, are you using leverage? Are you going to get margined out? Like that kind of stuff. You need to protect yourself against those type of things. Okay? People that look for home runs in this game, it's a very costly business. Rich people that make a lot of money, this is not how they make a lot of money. right? They make money with very small bets, right? They risk something that's small. Maybe a $50,000 bet or a $100,000 bet is not a lot of money for a guy that has $50 million, right? So if he loses $100,000, who cares? That's like losing $100. But if the bet pays off, right, that 50,000 turns into, you know, a couple 100,000, that's a big win. That's a nice win. And there was really little risk for this rich person. So that's how they do it, right? So they can make a lot of these small bets, and the one that pays off usually makes up for the ones that lose. And that's usually how it works. So don't think in the home run mentality. That's only for people who don't make money. All right, and rich people don't think that way. Unless you're Elon Musk. I mean, he's crazy as far as risk goes, in my opinion. But, you know, he's an unusual exception. All right, anyway. Let me see what else we got here. David from Spain, right? Yep, from Spain. What about DOT? DOT against the euro? Let's take a look. So, all right. So it's against the euro, right? The euro is not. I wouldn't consider the euro an unstable currency. So okay, we can give this chart, you know, similar to like the dollar, right? DOT against the dollar. Look, you have the bearish pin bar. So a lot of these things tried to break out, right? I think Adam tried to do the same thing recently, right? Let me just take a look at Adam real quick. Oh, look at that. It's still going. This is, okay, herd mentality right there. So stay away from Adam. That needs to pull back. But let's go back to DOT. So DOT euro. DOT euro is giving you the bearish pin bar. So not a good time to buy. And this is something like what Adam is doing right now, right? Vertical. This is what you don't want to see next, right? The bearish pin bar. And if it takes out the low of that candle, this is actually more of a good, I'm sorry, I can't see today. My eyes are off. This is not a bearish pin bar. This is a doji. All right, whatever. Same idea. You take out the low of the doji, then that will be a sell signal. So I would not mess with these, right? I don't like the failed high. This is a potential failed high area because you're just barely above this high. And you're waiting for support. You know, DOT has been generally one of the stronger ones. I mean, look at this structure on DOT. So you're looking for a support. Right now, your support's going to be right around there. That's your first support. You have another one right around here. So what prices are you looking at? Basically $20. Okay, that's the lower one. And the higher one is around $23, $24, right? And this thing right now is at 29. So you're better off, in my opinion, waiting for one of those pullbacks. Of course, Bitcoin and Ethereum should be doing something similar, okay? Bitcoin should not be, you know, giving you an outside candle like this. It should not be doing that, okay? All right, let me see where I am. Yeah, I got to wrap this up now. I'm sorry if I missed your question. Let me just read a couple more of these comments. I got so many today. I really appreciate everyone's comments and participation. Someone noticed that BTC somehow follows NEO in a very weird way. Could it be that someone plays with some kind of algorithm? You know, that could be a coincidence. I don't know why those two would be linked. But here's the thing about intermarket relationships, because, you know, that's one of the basic things that I learned as a chartered market technician. They made us read a whole book on intermarket relationships. These relationships are often temporary, right? Unless there's a reason, there's like a very specific reason, like for example, you know, S&P and stocks. There's a reason why that relationship exists, right? Something like gold and the dollar. There's a reason why that relationship exists. But something like NEO and Bitcoin, it could be temporary. So you can't bank on that. You can't bet money on those situations because it's there until it's not there. Remember, markets are mostly irrational. So I wouldn't go on anything like that. And even with fixed relationships like gold dollar, for example, we still see irrational things happen sometimes, rarely, but we see them where the dollar will be going higher and gold will be going higher too. I'm like, that can't be, but there it is, right? So markets are irrational. That's usually just the best. Just embrace that concept. So thanks for asking. Peter, Slovakia, welcome. Okay, so basically that DOT situation, I mean, DOT USDT is probably going to be similar. Yeah, similar to DOT Euro. Similar situation. So everything that goes for DOT Euro. Okay, Bart, great, as usual. Okay, no problem, Bart. and thanks for asking. Okay, so I see XEC. Okay, I like AMCX for a long. Kev says that's confirmation bias. Elizabeth mentioned confirmation bias. Well, what are you referring to, Liz, on that? I just want to answer that. Hi, nice to hear you. Oh, yeah, Yevgen. Yev, good to see you. Okay, cool. So yeah, I'm gonna wrap this up here in just a moment. Sorry if I missed your question. I think I got most of them. I just have to go. But Liz mentions confirmation bias. What are you referring to, Liz? One of the charts that I talked about? Because confirmation bias is definitely an obstacle that we all must deal with, right? And if you don't know what confirmation bias is, people that are listening, Google it. Just Google confirmation bias. And, it's basically we see things that we want to see. And things that we don't want to see, even though they're there, we don't want to see them, or we don't notice them. So for example, confirmation bias would be like, a fake guru who wants to instill hope would be like, oh yeah, just ignore this bearish thing going on over here. That's just nothing to see there, all right? But we have this bullish thing over here. So the hope strategy should go higher, right? That would be confirmation bias. And we all suffer from that. So, right, Elizabeth, right. And she's a therapist, so thank you for sharing that. Yeah, and we all suffer from that. And the news will put this stuff out all the time. And we're all going to pick and choose things that we want to hear from you. Oh, that good news report on this altcoin. But then there was that bad thing about Bitfinex. But who cares? I don't want to hear about that bad thing about Bitfinex. I just want to hear about the good stuff, because that's all I'm interested in. Right, confirmation bias. You find examples of that in all kinds of stuff, where we only want to see patterns that we want to see. Like when you're looking for patterns, for example, like in markets, we only notice the things that are favorable for us. If we're in a long position, we only want to see long information. We don't want to see bearish information, because it means we may lose. So we tend to put less emphasis on that. And it's not being objective. That's why it's bad, right? So you need to weigh everything out. You need to look at both sides and then determine, how you should adjust to that. And that's why with these pin bar situations like DOT, right? This is not a pin bar, but it's almost a pin bar, right? The reason why it's not a pin bar is because you have a long tail on the bottom. Pin bars only usually have a long tail, mostly to one side. So, but it's a doji, it's indecisive, and it's a possible failed high. That's a piece of information that you need to realize, especially if you just bought it, right? You're in a possible fake out here. So what do? Maybe tighten your stop, maybe reduce your position, maybe take a smaller loss, because this is not an attractive area for a long. This is an attractive area for a long, right around this area, right? Much more attractive. So if you had the bullish information develop at an area where it should develop, then okay, things are lining up. But when you have something that's looking bullish and then it's changing, you have to embrace that and look at it objectively. All right, so Elizabeth, thank you for mentioning the confirmation bias. Again, that's one of there's all these psychological obstacles that we must face as market timers, and that's one of them, okay? So that if you're going to research stuff, that's good stuff to research. Anyway, all right, so I'm going to wrap this up now. Again, I apologize if I missed your question. I'm trying to get back onto TradingView, and maybe sometime soon I will be able to, but otherwise, you'll find me here on YouTube. So let me just leave you with this. Again, it's in our mind. This is a mind game, okay? Timing markets is a mind game. You're not only up against your own emotional baggage, which we all have, but you're also up against the brightest minds who put together robots and things that are taking advantage of patterns that we can't even see. So you're up against a lot, right? On top of that, the costs of doing business and all kinds of other things. So you need to understand this from that psychological perspective first, and you need to focus on the risk first. Forget rewards, forget making money, because that's what leads to problems. It invites fear. So if you just focus on the risk, when you have a winning trade, then it's just about managing the winning trade. and seeing how much the market wants to pay you and making adjustments along the way. There's nothing to be happy about. There's nothing to be sad about. It's just, look, you know, the market is showing me this information. How does it fit into my strategy and my risk, right? The strategy, the rules that we have, help isolate an opportunity, okay? It helps us to filter out the random nature of the market, because markets are highly random, but they're not always random. So it's our job to try to find those rare moments where there is an opportunity, but they're rare the larger the time frame. You know, you want a lot of opportunities, you have to be a day trader, and that's a whole different game. I'm not going to talk about that now. But the point is, that's our job. So the rules help us to become more objective, right? And that's what we want to be, objective. What does the market say based on its structure, based on its price action right now, relative to what it was saying recently, right? And we're always making that comparison to get a sense of strength or weakness. When we have that information, we can then better gauge our risk and our potential. That's the best we can do, because we have to make decisions in the face of incomplete information all the time. That's what we have to do, right? So the less information that you can make a decision on, the better. All right, more is not better in this game. People, more oscillators, more lines, more tools, more this, more that. More is bad because it's complexity. You want less, right? Less is more. All right, so I'm going to leave you with that thought. Thank you again, everyone, wherever you are in the world, for taking the time to ask questions and participate in my stream. It's always nice to see everyone. I see a lot of regulars here. So again, thank you for joining me, and thank you very, very much for watching.